Welcome to Talk Tickers. We're your deep dive into the latest earnings calls, really cutting through the noise to get you informed fast.
That's the goal.
Today, we are digging into the Q2 2025 earnings call from Lantheus Holdings. Anyone following radiopharmaceuticals knows Lantheus. They've been a really significant player.
Absolutely, especially with their main product.
Right, but this quarter, well, the market reaction told a story. It was pronounced. Definitely signaled a challenging time for them.
It really did. You could see it in the numbers right away, unexpected headwinds, especially for a company where investors often look for, well, steady performance felt like a sudden shift.
Okay, let's unpack those headline numbers then, the ones that really caught everyone's eye immediately. For Q2 2025, Lantheus reported GAAP EPS of $1.12.
Yeah, and consensus was way up at $1.68. So that's a pretty big miss.
A huge miss. And non-GAAP EPS, also short, $1.57 reported versus that same $1.68 consensus.
Right, so missing on both EPS measures.
And the top line, total revenue landed at $378.9 million. Again, shy of the roughly $387.9 million consensus. That's actually 4.1% decrease year over year.
So, yeah, a tough trifecta of misses, as you said. Revenue, GAAP EPS, non-GAAP EPS, not what the street wanted to see.
When you start looking at the product mix, the picture gets, well, maybe a bit clearer.
I think so. PYLARIFY, their big one, the PSMA P agent for prostate cancer detection. Sales were $250.6 million.
Okay, but the key context there.
It's an 8.3% decline year over year. That's a core product, their flagship, facing real pressure.
Ouch, but not all bad news in the product lineup.
No, DEFINITY actually showed some resilience. That's their ultrasound contrast agent. Sales grew 7.5% year over year to $83.9 million. So, a healthy performance there.
So a real split story. PYLARIFY down significantly. DEFINITY showing strength.
Exactly. But given PYLARIFY's size and importance, that decline really overshadowed the DEFINITY growth in the market's eyes.
Got it. And some other key financials. They reported an adjusted operating margin of 40.4%.
Which is still pretty strong, objectively. And free cash flow was $79.1 million for the quarter.
Their cash position stood at $295.8 million. Though, we should note, that excludes the funds they just used for a couple of recent acquisitions.
Right. Important context, they've been active on the M&A front.
And maybe a signal of confidence amidst the turbulence, they announced a new $400 million share repurchase authorization.
Yeah, that's management signaling they believe the stock is undervalued. But, despite that signal, the immediate market reaction was just intensely negative.
Significant disappointment seems like an understatement.
It really does. The overall miss, but especially that PYLARIFY weakness, it just triggered a very sharp sell-off. It tells you investors are incredibly focused on execution right now, particularly in the core business.
Okay, so let's dive deeper into that PYLARIFY situation.
Yeah.
What really hit them so hard this quarter? Was it one thing or like a perfect storm?
Felt very much like a perfect storm. Really two main pressure points converging. First, you have CMS, the Centers for Medicare and Medicaid Services. They shifted reimbursement for certain procedures to what's called a mean unit cost model, or MUC.
MUC, okay. And that took effect when?
January 1st, 2025. So this quarter really felt the impact. MUC basically standardizes and often lowers how much hospitals and imaging centers get paid for using agents like PYLARIFY. It shifts more financial risk onto them.
All right, so the reimbursement landscape got tougher. What was the second factor?
Aggressive discounting. There's a competing F-18-based PSMA PEE agent out there, and Lantheus said this competitor got really aggressive on price, especially later in the quarter.
So lower reimbursement rates and a price war heating up. That sounds like a classic margin squeeze.
Exactly. A really difficult pricing environment just materialized quite quickly for PYLARIFY.
So how did Lantheus respond? Did they jump into the price war, try to match the competitor?
They took a specific and arguably tough stance. Management called it a disciplined pricing strategy. Meaning they consciously decided not to chase volume at any cost. They actually walked away from deals, from dose volumes, at certain accounts that were demanding pricing terms they felt were, let's say, unfavorable to the long-term health and profitability of the PYLARIFY franchise.
That's a bold move. Prioritizing margin and long-term value over near-term market share. A high-stakes gamble, really.
It absolutely is, especially when your flagship product is under pressure.
So how did that play out in terms of volume versus price in Q2? Did they lose a ton of volume because they held the line on price?
Well, this is where it gets interesting. PYLARIFY US volumes were actually up about 2% year over year and over 4% just from the previous quarter.
Oh, really? So demand was still growing.
The underlying demand, yes, they were selling more doses, but that volume growth was completely swamped by what they called net price compression. Basically, the average price they received per dose went down significantly.
Especially later in the quarter, you said.
Right. Management pinpointed late May through June as when those competitive pricing pressures really intensified and hit their net pricing. This also forced them to renegotiate some existing agreements.
Or walk away from some business entirely.
Yes, particularly with accounts that had higher exposure to that new MUC reimbursement, where the economics were tougher.
Now, regarding the competitor beyond just the aggressive pricing, did Lantheus raise any other concerns, maybe about clinical performance?
They did. Management mentioned seeing an increase in account losses, which you'd expect with the pricing pressure, but they also specifically cited hearing anecdotal reports from doctors.
Okay.
Reports about increasing numbers of false positives and recurrent prostate cancer patients when using that competing F18 agent.
False positives, that's a significant clinical concern.
It really is. And Lantheus was quick to point out that this risk, the risk of false positives, is actually mentioned in the competitor's own FDA package insert. It subtly reinforces PYLARIFY Y's strong clinical differentiation, even if it's losing some battles on price right now.
Okay, so they're facing these major headwinds on PYLARIFY, their main engine. How are they planning to counter this? What's the strategy to pivot and get back to growth? Sounds like they need more than one plan.
Oh, definitely. It's a multi-pronged approach. They're focusing on innovation within the PYLARIFY franchise itself and also on significant diversification across their portfolio.
Let's start with the PYLARIFY Y innovation. What's happening there?
The big news is a new PYLARIFY Y formulation. Right before the earnings call on August 5th, the FDA accepted their new drug application, the NDA, for it.
A new formulation. Okay, what's the goal? How does this help with the pricing and reimbursement issues?
Several things. First, technically, it's designed to increase the batch size by about 50%. That helps with efficiency, supply reliability, reaching more patients.
Makes sense. But the crucial part.
The crucial part is reimbursement. This new formulation is expected to be eligible for 3 years of transitional pass-through payment status, TPT.
TPT, we hear that a lot with new med tech. Why is that such a big deal here?
Because TPT essentially provides a separate, often higher Medicare payment for new technologies for those 3 years. It shields it from things like the MUC calculation initially. It encourages hospitals to adopt innovative tech without taking a big financial hit.
Ah, so it bypasses the immediate pricing pressure.
Exactly. Management explicitly said they believe this will level the reimbursement playing field. It lets the new PYLARIFY compete more on its clinical merits, where they feel strong, rather than just getting dragged into a price war dictated by MUC or competitor discounting.
That sounds like a potential game changer for the franchise. What's the timeline?
The PDUFA date, the FDA's target date to make a decision, is March 6, 2026. Assuming approval, they anticipate launching it maybe in the fall of 2026 or potentially January 1st, 2027, if they secure that TPT status as expected.
And the plan is for this new formulation to eventually replace the current one entirely.
Yes, that's the expectation, a full transition over time.
Okay, that's the PYLARIFY plan. What about the diversification piece? Reducing that reliance on one product line.
They've been very active with acquisitions. 2 key deals closed recently. Evergreen Theragnostics back on April 1st.
Okay.
And then Life Molecular Imaging, or LMI, which closed July 7th, so very recently.
LMI, what did that bring them?
This one seems particularly strategic. It brought Neurosec, that's an F18 PET imaging agent, but this one is specifically for Alzheimer's disease diagnosis.
Well, Alzheimer's imaging, that's a hot area.
Absolutely. And Neurosec just got an expanded label approval, which is important. It allows for broader use in diagnosis and monitoring, especially relevant now that we're seeing new Alzheimer's therapies, the amyloid targeting ones, coming to market. Doctors need tools like Neurosec to identify patients and track treatment response.
So these acquisitions are about adding new growth areas, new capabilities.
Precisely. Adding complementary tech, getting immediate new revenue streams like Neurosec, expanding their pipeline for the future, and critically, diversifying away from that heavy PYLARIFY Y concentration.
And speaking Alzheimer's, that LMI deal ties into their broader neurology ambitions, right?
Right.
What about MK6240?
Yes, this is where you see the longer-term vision really taking shape. MK6240 is their late-stage, tau-targeted radiodiagnostic for Alzheimer's. Tau is the other major protein implicated in the disease besides amyloid.
And that's progressing well.
Very well. The pivotal study was successful, and they're planning to submit the NDA in Q3 2025, so quite soon.
Alzheimer's imaging is potentially a huge market. What are their expectations?
They put out some pretty ambitious numbers. They estimate the U.S. Alzheimer's PET imaging market could top $1.5 billion by the end of this decade, and possibly reach $2.5 billion by the mid-2030s. They also see things like blood-based biomarkers not as competition, but as potentially expanding the market, identifying more patients earlier who might then need PET imaging for confirmation or staging.
So a big bet on neurology.
A very big bet. And it's not just Neurosec and MK6240. They also mentioned other pipeline products nearing launch in the next 18 months, like Octavi and PNT 2003 for neuroendocrine tumors. So broadening the portfolio is clearly a major strategic priority.
Okay, and let's leap back to that $400 million share repurchase we mentioned. Given the Q2 challenges, what message does that send?
It's a strong signal, I think. The board is essentially saying, we know the quarter was tough and the guidance is down, but we have deep confidence in the underlying value of this business and our long-term strategy. It's a commitment to shareholder returns even when navigating turbulence, putting their money where their mouth is.
So they have these strategic plans, the new PYLARIFY US formulation, the acquisitions, the Alzheimer's pipeline. But how did all this translate into the immediate financial outlook? Let's talk about the revised guidance for 2025 and what they're hinting at for 2026. This is really where the rubber meets the road for investors.
Yeah, and this is where the near-term pain was most evident. They significantly reset their full-year 2025 guidance.
How significant?
Pretty significant. Revenue is now projected between $1.475 and $1.51 billion. The street consensus before the call was closer to $1.57 billion. So a noticeable cut there.
And earnings.
Adjusted EPS guidance was also reduced substantially. It's now expected to be between $5.50 and $5.70 per share. Their prior guidance was $6.60 to $6.70.
Oof, that's a big haircut. And the reasons were primarily what we discussed.
Exactly. They explicitly cited the intensified PSMA PT pricing pressure and the impact of that MUC reimbursement on PYLARIFY. They did say the recent acquisitions will contribute positively, but clearly not enough to offset the PYLARIFY headwinds in 2025.
That's a tough pill for the market to swallow for 2025. Okay. But despite that, management seemed, surprisingly upbeat about 2026. Are they forecasting a sharp rebound?
They maintained a remarkably bullish tone for 2026, yeah. Even with the 2025 reset, they stated that achieving consistent double-digit growth in 2026 is, and I quote, certainly achievable.
Double-digit growth in 2026 after this kind of 2025. Where's that growth supposed to come from?
Well, they laid out a few key drivers. They expect DEFINITY to get back to a high single-digit growth path. They'll have the full-year contribution from Neurosec, thanks to the LMI acquisition. And crucially, they expect initial contributions from those new product launches, MK6240 for Alzheimer's, plus Octavi and PNT 2003 for neuroendocrine tumors.
What about PYLARIFY itself in 2026? Are they expecting that to bounce back?
They were actually pretty cautious there. They acknowledged PYLARIFY revenue might be flat, maybe even slightly down in 2026. That's because they'll still be annualizing, dealing with the full year impact of the current pricing dynamics before the potential benefit of the new formulation kicks in later.
So the 2026 growth story relies heavily on diversification and new launches, not a PYLARIFY rebound.
That seems to be the core message, yes. The company's overall growth strategy remains firm, driven by these new pillars, even if PYLARIFY US takes time to stabilize and potentially recover later with the new formulation.
The market clearly wasn't buying that 2026 optimism, at least not immediately. We saw the stock reaction shares close down, those at 28.6% the day after the call, on huge volume. That's just a brutal reaction.
Absolutely brutal. And it really highlights this significant disconnect, this gap between management's focus and the market's focused right now.
Explain that gap. What's the disconnect?
Management kept emphasizing the long-term strategy, the pipeline, the diversification, the potential of the new PYLARIFY US formulation, the Alzheimer's market. But the market's laser focus was just squarely on the immediate negative news. The Q2 miss, the PYLARIFY US profitability challenges, and that significant guidance cut for this year.
Near-term pain trumped long-term promises.
Completely. And you saw it in the analyst reactions, too. Truist downgraded to hold. Others, like Mizuho and Goldman Sachs, kept their buy or outperform ratings, but even they significantly slashed their price targets. Everyone became much more cautious, reflecting that uncertainty.
So investors are basically saying, prove it. Show us the stabilization. Show us the new products actually delivering.
That's exactly the sentiment, I think. Show me, don't just tell me.
So if you're watching Lantheus now, what are the key things investors need to see to bridge that gap and start regaining confidence?
Number one is visibility on PYLARIFY stabilizing. They need to see signs that the bleeding has stopped, evidence that the disciplined pricing strategy is working, and maybe market share isn't eroding as fast as feared or pricing is bottoming out.
Some sign of a floor.
Precisely. And then number two is concrete progress and clear timelines for the new launches, especially MK6240, and critically, getting that TGT status confirmed for the new PYLARIFY Y formulation. Hitting those milestones will be absolutely crucial to convincing the market that the long-term narrative is real and achievable.
Okay, that makes sense. All right, let's pivot now to our This Is Not Financial Advice segment. This is where we throw out some let's call them outrageous but plausible trade ideas, stuff you might brainstorm in a high-stakes investment committee meeting purely for entertainment and education. Remember, seriously, not actual financial advice. Expert, what kind of contrarian or maybe catalyst-driven idea does this Lantheus situation spark for you?
Okay, well, given this big reset and the focus on future catalysts, here's a thought for someone with a high-risk tolerance. Consider maybe looking at long out-of-the-money call options on LNTH, specifically targeting the March 2026 expiration date.
March 2026 calls. Why that specific timing and structure?
The logic ties directly back to that new PYLARIFY formulation. The PDUFA target date is March 6th, 2026. If, and it's a big if that new formulation gets approved and it secures that crucial transitional pass-through, the TPT status.
The reimbursement game changer.
Exactly. That event could fundamentally reset the narrative and the economics for their biggest product. It could significantly boost their competitive footing, improve margins, and potentially trigger a really sharp, unexpected rally in the stock. The market might rapidly reprice the long-term value of PYLARIFY.
So it's basically a binary bet on that specific regulatory catalyst.
Pretty much. High potential reward if it hits because those out-of-the-money calls would gain value exponentially, but also very high risk. If approval is delayed or TPT isn't granted, those options could easily expire worthless. It's a catalyst-specific bet.
Interesting. Okay, building on that theme of betting on Lantheus's strategic moves, any other angles? Maybe for someone who believes in the diversification story but wants to hedge a bit.
Well, if you're a true believer in the long game, Lantheus is playing the disciplined pricing now, the TPT potential later, the whole Alzheimer's diversification you could consider a pair trade.
Long Lantheus, short something else.
Right, long Lantheus stock, and simultaneously short maybe a broader healthcare diagnostics ETF or perhaps a specialty pharma ETF.
What's the thinking there?
The bet is essentially that Lantheus's specific company catalyst getting TPT for new PYLARIFY Y, successfully launching MK6240 into a growing Alzheimer's market, will allow it to significantly outperform the broader sector over, say, the next year or two. You're isolating Lantheus's potential success against the general industry backdrop.
So you're betting on their specific execution overriding sector trends, especially if, say, competitors face their own issues.
Exactly. Maybe the PYLARIFY Y competitor faces more scrutiny over those false positives, or maybe other companies in the sector face different headwinds. This pair trade is a conviction play that Lantheus's specific strategic pivots will create alpha relative to its peers or the sector average. Again, not without risk, but a way to express that specific company view.
Fascinating ideas. Definitely food for thought, and again, purely for educational discussion.
Absolutely, not recommendations.
Okay, so let's wrap this up. To recap, Lantheus's Q2 2025 earnings call really delivered a significant reset. It was driven mainly by those external pressures, reimbursement changes, competition, and their own strategic disciplined response concerning PYLARIFY.
Yeah, a tough quarter, no doubt. But management isn't just sitting back. They clearly laid out a strategic pivot. It's focused on that new PYLARIFY Y formulation, which is engineered, really, to regain pricing power and market share via TPT status.
And at the same time, aggressively diversifying. Pushing hard into the high-growth Alzheimer's imaging market through those recent acquisitions and their own pipeline development, like MK6240.
It really is a classic setup, isn't it? Near-term pain, visibility challenges right now, but with a clear strategy aimed at significant long-term gain.
And the market. It's going to be watching like a hawk, looking for any sign of stabilization in PYLARIFY's performance, and critically, looking for flawless execution on these exciting but challenging new product launches.
We hope this deep dive has given you, our listeners, a much clearer picture of where Lantheus stands today and, maybe more importantly, the path they're trying to navigate going forward.
Definitely a complex situation. And as always, please remember, everything we've discussed here is purely for educational and informational purposes. It is absolutely not financial advice.
That's right. We strongly encourage you to do your own research, your own due diligence, and always consult with a qualified financial advisor before making any investment decisions based on anything you hear here or anywhere else.
So, what are your thoughts? Do you think Lantheus' strategy is the right one to handle these competitive pressures? Will the big bets on the new formulation and Alzheimer's imaging pay off enough to overcome the current PYLARIFY issues? We'd love to hear what you think. Join us next time for another Talk Tickers Deep Dive.